Deputy O'Rourke.
Thank you. I welcome the opportunity to contribute to this motion on the cost of motor insurance in Ireland. I think it's hugely important, Minister, that you accept the motion from Deputy McGrath because of the seriousness of the issue that's out there at the moment and the pressure that's putting on so many individuals and so many families. This is a concern that was raised to me on a regular basis in my constituency, and the last week one constituency highlighted to me that the cost of their motor insurance went from €900 to €1,300 on renewal. And this is a 7-year-old car and the full no claims bonus, etc. So it is becoming a massive issue. Another constituent who is a commercial haulage business is now considering moving his headquarters abroad so that he'd be in a position to secure more competitive insurance for his business and be in a position to compete more effectively with other cross-national haulage companies who have access to lower insurance costs. As we know, consumers have been faced with an increase of 60% in the cost of their motor insurance since January 2014, so this is now becoming a critical issue for Irish consumers and Irish businesses, in particular haulage-related business. Rising costs of insurance is also affecting our competitiveness, and action needs to be taken to reverse the trends that have emerged. Not only has the rising cost of insurance affected individuals, it will become a barrier to better maintaining or creating jobs in our economy if we do not address this very serious issue. Recent reductions in the last budgets in the universal social charge becomes meaningless if the benefits that is received from reductions in the USC is just taken away, and more by the increase of motor insurance. A lot of debate at election time often revolves around tax cuts to help with their living standards. While this is of course very important, in my view not enough emphasis is placed on the cost of living, such as the cost of motor insurance. We need to focus on introducing policies that assist in reducing the cost of living and bring about a better standard of living. As this motion is designed to achieve that, there is little point in sharing the benefits of modest recovery by reducing taxes such as the USC if it is going to be taken back by increases in motor insurance. This effectively transferring the reduction in the USC and transferring to the coffers of the insurance companies and further bolsters their profit. Any reduction in universal social charge should be a direct benefit to the workers and should not be taken away by inflated insurance cost. Giving more disposable income to workers is better for our economy and provides a stimulus for growth and benefit to the local businesses. All our efforts should be focused on ensuring that we increase disposable incomes, which then becomes available to our economy and not be grabbed by the motor insurance industry. There are 12 key elements in our action plan to tackle motor insurance costs, and I will focus on 2 of them. Firstly, I believe that we need to establish the Motor Insurance Advisory Board. Given the track record of the MIAB in the past, this seems to be imperative action for this government if we are going to make progress in reducing the motor insurance costs. The board should be given specific timelines to report to the Dáil or Oireachtas Committee on recommendations to tackle the high cost of motor insurance. The board should comprise of representatives from insurance companies, the Department of Finance and Jobs, Enterprise and Innovation, motorist representatives bodies, haulage companies, older people representatives and the Road Safety Authority to examine all relevant issues that affect motor insurance premiums. The Motor Insurance Advisory Board that was established in the late 1990s put forth recommendations that helped reduce insurance costs by 40% in real terms between 2002 and 2013. This was a significant achievement at the time, and there is no good reason why such a board should not be established again. Secondly, I want to highlight the more vulnerable motorists. Low-income and older people who use their own transport are particularly vulnerable in rising insurance premiums. Increased insurance costs eat up greater proportions of their disposable income. Their income trends tends to be fixed, so an insurance cost rise, they have less of a net income to survive, and we are making them more vulnerable from a financial perspective when they should be trying to be made more secure. In recent times, some insurance firms have started restricting the availability of cover to cars over 14 years, which often relates to those on low incomes or older people. As the law stands, individual insurers have the right to refuse cover. It is not acceptable to have a blanket refusal to quote for businesses for vehicles older than 14 years. This could be construed and targeted attack on the most vulnerable motorists and the most vulnerable in our society. We need legislation that would limit the ability of insurance firms to refuse covers in such circumstances without a valid reason, and others that other than simply the age of the car. Thank you, Concordia.
Thank you, Deputy O'Rourke.